Alright, it is the morning of March 27th. It is 9:20. This is MoleHill News. I'm Old Man Todd. Hopefully this is educational. Perhaps it may be entertaining, but it is never, ever financial advice. Let's take a look at the big picture first. It's a little mixed. I mean, the big two are green. We got a lot of red, scattered about in the sort of medium-sized caps. So let's take a look at the top 10. You have 55K, 55.8 for Bitcoin, 1.7 for Ethereum. Man, they've been stuck at that 1.7 mark for a long time. Binance 262.96. Tether's in fourth place. Binance knocked it out of third. Cardano is 119. Polkadot's 32.33. XRP is 35 cents. Uniswap is 28.22. Litecoin is 183.88, and Theta is 12.08, hanging on to that 10th place spot. Let's see. Yeah, 900 mil above Chainlink. Alright, so we were just looking at this a second ago, but let's get back over to the Bitcoin. It's, since we talked about 13 hours ago, it's been up 1.8, 1.9-ish%. I went ahead and moved this bar back up to 57.5. It was down here in case we were trying to go down to 50, but it looks like we're not doing that. So this would be 55,000, this would be 52,500, and this would be 57,500. So yeah, that is the little bracket we're drawing here. And as you can see, Bitcoin is doing what Bitcoin likes to do, which is to find a spot and just kind of hang out and like go up and down above it. Let's take a little weather report here. So last time we chatted, we were trading inside the cloud. We got out of that, bounced off of it a few times before finally crashing through as it thinned out. We had some thin resistance that we bounced off of about twice before breaking through and going upwards pretty hard. When did we break through? 8:05, an hour and a half ago. See what I mean about these kids, dude? They're terrible. I know you can hear them in the background. They're great. They're great. I'm fucking around. They're awesome. Alright, so yeah, we broke through some pretty thin resistance, bounced off of it once, and are taking a nice little upward move here. Some thin support is forming on the horizon there. Let's see, the conversion line was real close, but still below the baseline for a while, and then at about 10 after 8, about a little over an hour ago, it went ahead and did a gold cross, but they've been sticking real close. So there's not a huge gap there, but there is something going there, and they are both, the lagging indicators above them both, so that is a good upward sign, but not a strong one or anything, especially with that thin support there. So small upward signs. And the EMAs were arranged in a more downward pressure arrangement, and they've been pretty squished for about 4 or 5 hours now, but they are currently sort of arranging themselves for some upward momentum. I wouldn't call that an upward signal because they could just as easily flip around again, but I would say that they are basically neutral. So there's extremely light upward pressure on this price, but I think it is insignificant. It is basically neutral. Liqwid Finance moving closer to challenging Aave and Compound, but on the Cardano network. That would be as opposed to being on the Ethereum network. Liqwid Finance is one of the most promising projects targeting DeFi on Cardano, and in a recent interview, the founder laid out what makes this project unique and why Cardano is superior to Ethereum in powering DeFi. It allows Cardano, that is, allows borrowers to enter at a very competitive interest rate because we've incentivized our supply of stablecoins, ADA, and other native Cardano assets. Actually, sorry, Liqwid, not this reference. This paragraph is referencing Liqwid. Liqwid is made possible by the Alonzo hard fork on Cardano. This hard fork, which has CNF reported as scheduled for July-August, which will bring smart contracts to Cardano. Ethereum has been massively successful and is the reason most cryptocurrencies projects exist today. However, its inability to scale and very high transaction fees have attracted great criticism. Ethereum has been working to solve the gas challenge, but most solutions are yet to gain widespread usage. In its current state, taking out a $1,000 loan would be quite affordable in a DeFi platform compared to traditional systems. However, the gas fees would be higher than interest, making such a loan more expensive than it should be. So, yeah, that's unfortunate because I was doing a lot of trading last summer and just can't bring myself to do it with the gas fees. I'd rather just hold what I have and just take my place on the sidelines. But I'm definitely gonna start trading Cardano in July or whatever when they fork. Ion is a decentralized identity service. Oh, I should read the headline first. My bad. How Microsoft Identity Service on Bitcoin, which is interesting, gives you control. Not on like Ethereum, not on Cardano, not on IOTA, but on Bitcoin. So, very interesting. Ion is a decentralized identity service. It's a public identity network that provides distributed public key infrastructure through DIDs and the side tree protocol, which is an open source protocol for decentralized identifiers. And all of this is running on top of Bitcoin. This is all done by Protocol Labs. Let's keep going. DIDs are identifiers that can be used to secure access to resources, sign and verify credentials, and facilitate application data exchange. Okay. So it's like a username password, but it's encrypted. I guess this is keep reading. It means DIDs use Bitcoin to create digital IDs that authenticate online identities. A user uses a public and private key to verify they own a specific ID, such as an email address, social account. DIDs are owned and controlled by a person, company, or device, which is not the same with traditional usernames and email addresses. Ion needs no special protocol tokens, trusted validators, or additional consensus mechanisms, just the linear progression of the Bitcoin's time chain. I think that's the critical thing to hear out of this. DIDs do not depend on any outside organization or trusted intermediary. That is the really interesting part, and I think that's probably where they picked Bitcoin, because there is no governing layer that you could possibly entangle this with. There is no company that can go out of business, and suddenly these things aren't available or functioning how they're supposed to be. So that, I think, is kind of where they're going with that. I think it's really interesting. And the first thing people might think is like, well, damn, Bitcoin's expensive. Do I have to like own Bitcoin to make this work? And I don't think that'd be the case from the user's side. And I do think that if you did, it would be something like 1 Satoshi, like 1/1,000,000th of a Bitcoin, which you can currently get plenty of Satoshis for $1. So I think that, yeah. And I think it would be more on the infrastructure of the company's side. Like if I was a company with 1,000 users, I'd need to spend however much to get 1,000 Satoshis or something. I don't know. That's my guess. Perhaps you don't even need to own Bitcoin for this to work, but I think you would have to. I think you have to entangle even the smallest amount of Bitcoin with each ID. That's how it would be in permanently on the blockchain until you deleted that ID or something. The history of that would stay on the blockchain, just that you wouldn't have it, like you would be releasing it back into the stream, if you will. Like that's Satoshi or whatever. That's my thought. Like what I know about layer 1 on Bitcoin. But that's a pretty interesting one. So is the Liqwid thing. So is like, DeFi coming to a platform where you can actually afford to get in there. So, all right. Thanks for checking it out. Like and subscribe, and I come back for the evening news.